Is that the amendment be disagreed to. The member for Warringah.
Thank you, Mr Deputy Speaker. I rise today to address this House on a deceptively simple yet incredibly important bill, the Trade Support Loans Amendment Bill 2023. It's accompanied by the Student Loans Overseas Debtors Repayment Levy Bill 2023. So what are the trade support loans bills? Trade support loans are interest-free, income-based government loans that act as an incentive for people to complete their training in priority trade occupations. The loans are interest-free while you are studying, but then are indexed by CPI. Provided studies are successfully completed, the amount to be repaid is discounted by 20%. So I will return to the question of the CPI indexing later in my speech, as we know that is problematic across a number of areas. What trades are supported in this proposal? So currently, the occupations included are limited to the traditional trades. This limitation does not serve the new economy, I would say, and does not achieve equity and certainty, and certainly does not benefit a whole range of occupations where Australia has a desperate and current identified need. So to remove current limitations, the Trade Support Loans Bill allows the Minister, by legislative instrument, to extend the types of occupations that will be covered and that will enable trainees to qualify for this type of discounted loan whilst completing their training and studies. So what are the changes being made by this legislation? This expanded list of occupations, to be called the Australian Apprenticeship Priority List, has the potential to dramatically expand eligibility for loans to apprentices and trainees working in a very broad range of occupations, which we know are subject to skill shortages. Australia's skill shortage is the second highest in OECD countries. We have been advised that the list will include occupations such as early childhood education, aged care and disability care, but also will include occupations such as enrolled nursing, personal care assistants, therapists, dental technicians and many more. The inclusion of these occupations where current shortages exist is to be applauded. Now, we have to recognise traditionally apprenticeships and traineeships have overwhelmingly been in male-dominated occupations. Only a very small number have been available in occupations that are more female-focused. So expanding this list to create some gender equity for young people in accessing the scheme is incredibly important. So do the changes proposed in this bill match the need? The Australian Apprenticeship Priority List is the real crux of the change in this legislation. Getting this list right places a substantial and ongoing responsibility on the Minister to ensure that that the list is sufficiently expansive and reflective of current needs as well as anticipating future needs. And realistically, it needs to remain dynamic to enable we meet future challenges. So what can we do to ensure the list becomes anticipatory rather than purely reactive? Well, getting it right requires understanding of and responding to the breadth of current needs and opportunities. Getting it right also requires anticipating what the new economy needs are going to be now and well into the future. The February 2023 labour market update listed the top 20 occupations in high demand nationally. These include a range of ICT disciplines from chefs, construction managers, retail managers, advertising and marketing professionals, physiotherapists and gardeners. So the needs are very, very broad. The labour market update also noted that it's important to recognise that there are many, many more occupations of key significance to the economy and the well-being of Australians. The need for additional workers in the new economy will include, for example, electricians with specialties such as heating, ventilation and air conditioning. And depending on what the government wants to do with our metals processing sector, metallurgists and other trades involved in the processing of critical minerals. The need for STEM qualifications tops every list. So what are the benefits? The people and businesses, for example, in Warringah, have been crying out for such changes. Many of my Warringah constituents have raised the challenges faced in employment and operating and building businesses because of skills shortages and difficulty in accessing talent and workforce. This bill will benefit many businesses around Australia, but also in Warringah and Warringah residents and businesses in Warringah, as well as all Australians. There will be an increased number of Australians who will be able to afford occupational training. Those already in training facing hardship will be able to get discounted loans to ease that hardship. Those in training are more likely to complete their training because of the 20% deduction for completing apprenticeship and traineeship. That is that incentive, that carrot to get through. Because currently the statistics for completion are simply not good enough, and we are wasting resources in training up but not getting that completion factor. There will be increased choice for careers due to the broadening of occupations supported and increasing that accessibility to those occupations. And there will be increased availability of trainees and qualified people for business and industries to employ. The bill will support the new economy by encouraging sustainable and inclusive economic growth, contributing to the reduction of inequities, in particular gender inequity, and boosting workforce participation by addressing barriers for women, people with disabilities and low-income earners, reducing significant disadvantage by abolishing the current emphasis on favoured male-dominated industries, pursuing broad-based economic growth and jobs creation, and embedding positive government interventions to support inclusion and sustainable growth. But the opportunity for more is there. So what else should the government be addressing? This bill is a critical step, and I encourage the government to expand and extend its support to the new economy by providing benefits that are far-reaching and will enable Australia to prosper into the future. We should be aiming to redress our fall in the Global Innovation Index to 25th. We are down since in 2018. We were at 17th, and we are now at 25th. Through this expanded emphasis on skilling the broadest range possible, innovation will play a huge role in the future of the Australian economy. Equipping and upskilling new and existing workers for future jobs with STEM skills will be a key enabler for Australia to embrace new economy opportunities. Important contributions to the workplace and the economy flow from those who are re-entering the workforce after an extended absence. It's easy for them to be overlooked. They will not only need the financial support possible under this Trade Support Loans Bill, they're also crying out for a simplified training pathway to facilitate their return to work, including more tailored training offerings which more accurately take into account their earlier training and their incredible wealth on the job experience. And this is where gender equity plays a huge role, as we know that there is a huge amount of women who have, through caring responsibilities, left the workforce, wanting to return to the workforce and to paid employment, but they are limited by that access to retraining and the difficulty of those training pathways. Now, we have to talk about indexation, and it is a really critical issue. CPI is applied to all student loans, including loans under this Trade Support Loans Bill. There has been a concerning increase in student debt over the past 2 years because of the above-target inflation and hence above-average indexation. So we've gone from 3.9% last year, and we are seeing 7.1% this year. The rise is creating great consternation amongst younger generations who are facing higher cost of study, higher levels of debt, and now the debt is growing faster at rates faster than they can possibly pay it down. This year, the increase will rise faster than the average home loan and nearly double the rate of wages growth. So while I hope that this year is an anomaly, what I think it has shown is that the system is actually not quite right, and it is time for the government to look at that. We can't afford to put additional burden on younger generations who are already struggling with cost of living and housing crisis. Graduates in the 20 to 29 age group will take the brunt of this CPI increase, and their increase their increase rising by an average of some $2,069 on the median debt of $29,000, a bit over $29,000 from the study. So with an increasing number of jobs requiring further education and training into the future, we must be seeking ways to reduce the fear of a debt burden on our younger generations and older Australians seeking to retrain and re-enter the workforce. Alternative solutions need to be considered to relieve this burden. One potential mitigation would be to consider changing the indexation rate to be the lower rate of either the Consumer Price Index or the Reserve Bank of Australia's official cash rate over the course of the year. So to give you an example, give the House an example of what this would do this year, it would mean indexation would be approximately 2.66% rather than the planned 7.1%. Alternatively, the government could also consider linking the wage price index. So indexation would be linked to wage price index, which is as it's done in the UK, for example, and that would create a link between ability to repay and increase of debt. So as the government considers further incentives around education, it must consider the disincentives that exist in the system to study and to address the fear of the debt burden incurred by those training, whether it be through tertiary education or apprenticeships and traineeships. That fear of that debt burden is real. It is a very prominent part of the decision-making, and we must, in this place, and I urge the government to do more to address that fear and concern and deal with the debts incurred and how they will exacerbate future cost of living pressures for young Australians. I believe the statistics are that currently we have about 4 people working in Australia in the system for every 1 person that doesn't work. In about 20 years, I believe it's anticipated that we will be changing that ratio to about 2 people working for every 1 person working. So that says our system needs to adapt and change, and we must incentivise that training and participation in the workforce. So I commend the government on the Trade Support Loans Amendment Bill, and I will support this legislation, but I encourage the government to be dogged in pursuing innovation and innovative solutions to address training and workforce issues, as I have highlighted, and to maximise workforce potential and contribution in our emerging new economy. Do not just look to immigration as a way of solving jobs and skill shortages, because that creates a whole range of other problems when it comes to infrastructure and housing and other access. We first should be making sure we are maximising utilisation and participation of Australians here, now. And that means addressing gender inequity issues and opportunity for training and accessing paid employment. So I urge the government to consider further action in this front. Thank you.